Hey everyone, welcome back. Today we're looking at Rolls-Royce. Rolls-Royce Holding, to be specific. Rolls-Royce Holding is perhaps one of the most impressive companies I've come across recent years. It's a very interesting company for a lot of reasons. One, to be very specific and straightforward, is that this company seems to be heavily undervalued. Another interesting thing about this company is that it doesn't seem to be very attractive to greater investors worldwide. In other words, the stock often underperforms relative to the importance of the brand and the value that the brand adds to its partners. That being said, I want to get straight to the point, something that I've realized in Rolls-Royce very specifically. Now, this has come out of a few analysis I've created of this company. Very straightforward analysis, if I'm being completely honest. Let's get straight to the point. Rolls-Royce as an entity has indeed been increasing their profitability throughout the entirety of the last 2 decades, if I'm being completely honest. They've really risen and raised the bar in the last 2 decades, to say the least. That's an understatement if there were ever one. Looking back at 2000, this company was generating roughly 1.4 billion. This was quarterly, by the way, in early 2000. Comparing that to what the company is generating right now, which is currently in 2023, approximately 4.4 billion quarterly. But here's where it gets interesting. Let's look back at 2014. 2014, this company was generating roughly 3.4 billion quarterly. And let me say, in those years, it was actually more consistent with its earning across the board. Reason I say more consistent, anywhere from 2009 upwards, it was actually very consistent. However, recent years from 2020 to 2024, in fact to 2023, it's been a little bit volatile. Granted, you might want to say that the pandemic might have had something to do with that, but Rolls-Royce, like many business, has recovered since then. What I'd like to mainly focus on is 2014 and 2023. This is almost a decade apart. In fact, we're in 2024 now, so it's pretty much 10 years apart. The revenue difference is roughly 1 billion on a quarterly basis. That's the difference in terms of revenue, roughly. And this was late last year in Q3 and Q4. It's roughly 1 billion difference. However, late 2022 and early 2023, you saw revenue on a quarterly basis that were similar to 2014. Meaning, has the company really changed all that much in the last 10 years for investors to feel motivated to invest in such a company? For some investors, the answer is quite straightforward. Rolls-Royce has not done enough for them to invest in such a company long term. And this is what I mean when I say this company is not that attractive to investors on the international scale. If 10 years have gone by and the revenues are still roughly the same, especially in 2022 and early 2023, that's not impressive for investors. However, in late 2022 and early 2023, the numbers were quite low. That's similar to 2014, and that made the stock crash. That was one of the many reasons why the stock crashed. But they have been recovering gradually. And partly when the stock crashed, people just panicked. So the stock went from being undervalued to being extremely undervalued. In fact, too undervalued. It was so undervalued only a fool wouldn't invest. So remember these numbers from 2014 and 2024. Now I'd like to take a look at the stock prices in 2014 and 2024. The last time the Rolls-Royce stock was this high was actually 2014. In fact, the middle of 2014. It correlates with the revenue expectations. But the stock being incredibly cheap in 2020 and 2022 and 2021 did not make sense relative to the amount of money they were earning. That's what I mean when I say the market really panicked. And this panic lasts from 2020, 2021, and 2022. It's only recently in 2023 the stock has really been rising back up like a phoenix from the ashes. So the real question is, can the stock do any better from what it is right now? The last time it was at this price was 2014. That's relative. Can the company revenues do better from what it is right now? The last thing we want from Rolls-Royce is for them to go back to 2014 revenue on a quarterly basis. Please, let's keep it above 4.4 billion. At least keep it above 4 billion. Because in 2022, early 2023, it was around those numbers. And like I said, that was unimpressive. The best revenue for Rolls-Royce so far, believe it or not, was 2020 and 2021. So why the heck was the company doing so bad in terms of the stock price? And this is what I mean when I say the market really panicked because of COVID. And due to that, people sold too much because of that panic. But also, now that people are reinvesting, I feel like people are also jumping on the bandwagon and perhaps investing too much. If the Rolls-Royce company can continue to grow the quarterly earnings back to the 2020 and 2021 revenues, which was basically above 5 billion on a quarterly basis, above 6 billion sometimes on a quarterly basis, if they can get to that stage, that is the reason to invest. So if we're investing now, we're investing based on the analysis that Rolls-Royce can get back to this stage. Take a look at 2012. They were roughly generating 3 billion flat on a quarterly basis. In 2013, that rose to 3.8 billion. And then in 2014, it fell back down to 3.4 billion. Rolls-Royce did not see 3.8 billion again until 2017, when they risen to above 4 billion for the first time on a quarterly basis. So it's very much possible that Rolls-Royce could accumulate the revenue generated on a quarterly basis above 5 billion on a quarterly basis. Now that they're in the 4.4 billion region, 5 billion is definitely on the table. And this year, 2024, is a very important year for Rolls-Royce to prove themselves. Now, there are continuous positive news coming out of Rolls-Royce. If I'm being completely honest, this is not a company that is short on positive news. Rolls-Royce announces Indigo has agreed to order 60 Trench XWB engines. And this is continual positivity for the Rolls-Royce company, if I'm being completely honest. And the drawback in the Rolls-Royce stock price could only benefit us as the investor if the stocks become cheaper. Because yes, the company will grow to 5 billion on a quarterly basis in revenue, probably 5.5 eventually 6 billion. So there are some positivity coming out of Rolls-Royce, and it's certainly a turnaround in recent years. Because I think one of the biggest negatives was seeing Rolls-Royce doing similar numbers to 2014 in quarterly earnings. That is not impressive in the distance of 10 years. 10 years, you're supposed to be doing significantly better. So even though the revenues were growing, the problem is they fell off the map, basically. After 2021, they fell off the map. It's a huge reduction in positivity from the Rolls-Royce company. Rolls-Royce and Turkish Airlines celebrate the ongoing strategic partnership. They have a very strong partnership that benefits both of them. Especially if you're investing in Rolls-Royce, this will benefit you as well. Rolls-Royce Liberty Works selected for NASA Power Conversion Development Contract. Like I said, and a lot of these positive news are coming out of Rolls-Royce in early 2024, this year. So it's a big company, it is a global company, but I still think it is somewhat undervalued to the long-term potential of this company. Imagine if this company had someone similar to Elon Musk at the helm. Imagine what would be possible with the Rolls-Royce company. Basically, Rolls-Royce would have been, imagine putting SpaceX and Rolls-Royce together. And Starlink. Don't forget Starlink. That's possible with Rolls-Royce. But if they haven't got the correct leadership, they do lag behind. And I certainly don't think it's a matter of a lack of investment on Rolls-Royce's side. I don't think so. There's a lot more finer details to go through. Some of these details I've already been through in my previous Rolls-Royce video. But granted, I'm willing to go through these informations once again because there have been some changes. Rolls-Royce chief amasses 22 million paper profit as shares jump. This is a story I don't even want to get into because it's a little bit boring and expected. If I do go through this story, as if you requested in the comments below. I'm seeing reports from the Telegraph. Rolls-Royce scaled back plans to build nuclear factory in the UK. This is April 27th. So this is a very recent news. So this was for the small modular reactor, the SMR program in the UK, following delays to a government design competition. The FTSE 100 company had originally proposed one factory to make heavy pressure vessels for SMRs and another to make a building block for the reactor. It had drawn up final shortlists for a location for a pressure vessels factory, including the International Advanced Manufacturing Park on the outskirts of Sunderland, Tees Work in Redcar, and the Gateway Industry Park in Deeside, Wales. I'm pretty sure I'm pronouncing these names incorrectly, so I do apologize. But recently, Royce confirmed it no longer intends to proceed with that plan because there's no longer time to build a factory and to make the pressure vessels for early 2030s, when it hopes to complete its first SMR. It is still proceeding with work to build a second factory. However, the company had been working for the outcome of an ongoing SMR design competition in the UK, first announced by the government in 2015. But that competition is being repeatedly delayed, with the arm-length body Great British Nuclear only formally created this summer and winners not due to be announced until June at the earliest. So instead of engineering giant will now buy its heavy pressure vessels from a third party. Do you see? Instead of building it. Instead of Royce building these things for themselves, they will now have to buy it from third party. There could be positives and negatives there, if I'm being completely honest, because I think ultimately Royce wanted to have more control over their manufacturing state. The large metal components sit at the heart of nuclear reactors and must be able to withstand extreme high temperatures and pressures. Now, earlier this month, Sheffield became the sole UK company to gain the qualification needed to make SMR's reactor vessel components. Despite having it shelved its plans for heavy pressure vessel factory, Royce were still pressing ahead with plans to build a second factory, of course. So on Friday, a spokesperson for Royce, they confirmed the company will now prioritize work on the modular assemble and test facility, adding our efforts are focused on identifying the best site to support our deployment at pace. So they still intend to build this factory. Of course, they still intend to build SMRs, but it's just going through delays. But if you'd like me to go into more details on some of these topics, I could do in another video. Please leave a comment below if you'd like me to expand on all of this information in regards to Royce. I hope you've enjoyed this video. Thank you for watching. Subscribe to see more. Leave a like, leave a comment, and I'll see you in the next video. Peace.